Good morning, Black America. Grand Rising, beloved. I'm Crypto Stock Markets, and here's what's moving the market today. Bitcoin is pressing towards 70,000. Crypto funds just pulled in roughly $1 billion after 5 straight weeks of outflows. Green candles are back on the screen, but I'm not celebrating yet because prices moving up does not automatically mean foundation underneath is strong. Right now, we are looking at a divergence. Risk assets are acting optimistic. The real economy is acting tight. Let me explain why that matters. Housing is one of the biggest credit engines in this country. When housing moves, money moves. When housing freezes, liquidity slows. The median home price in America is sitting around $450,000. 5 years ago, it was closer to $270,000. That is more than a 50% jump. Wages did not jump 50%. Mortgage rates went under 3% to roughly 6% and above. That is a payment shock. To qualify for a median price home right now, you need income well above what the median household earns. That is not a headline. That's straight math. Pending home sales are sitting at record lows. Those are signed contracts. That is for demand. When contracts drop, volume drops. When volume drops, credit creation slows. Banks write fewer mortgages. Construction slows, renovation slows, furniture slows. Local service work slows. Housing is not just about ownership, it is about money velocity. If that velocity is slowing, liquidity is not expanding. Now layer energy on top of that. Gas prices are back above $3 nationally. Oil volatility is creeping up again. Shipping through key global routes is facing disruption. Energy feeds inflation. Inflation influences rate policy. Rate policy controls liquidity. If oil pushes higher and inflation firms back up, rate cuts get delayed. No rate cuts mean tight money conditions remain. So here's the situation. Housing is tight, energy risk is rising, liquidity is not clearly expanding, and yet Bitcoin is rallying. That is why I'm cautious, because when risk assets run ahead of macro conditions, the move needs confirmation. Without confirmation, it becomes vulnerable. I am not calling a crash, I am explaining structure. When liquidity truly expands, you see credit growth. You see easing financial conditions. You see supportive rate policy. Right now, we see stress in the housing and uncertainty in energy. That does not equal clean bull fuel, it equals tension. Now let's talk about what to do with that information. I'm not here to scare you, I'm here to protect positioning. Bitcoin near 70,000 feels strong. Fund inflows feel strong. Sentiment feels stronger than it did a month ago. But discipline matters more when things feel comfortable again. If you are up heavy, protect some of that upside. Locking in partial gains is not weakness, it is positioning. Do not increase position size because of excitement. Do not chase breakouts blindly. Do not let green candles erase macro awareness. Liquidity is the oxygen of markets. When liquidity is abundant, rallies breathe easy. When liquidity is tight, rallies struggle. Right now, we do not have confirmed oxygen expansion. We have housing pressure. We have energy pressure. We have policy uncertainty. That means you move measured. Keep dry powder. Keep position sizes reasonable. Watch oil. Watch housing data. Watch unemployment. If unemployment begins rising while housing remains frozen, that is when credit risk increases. If oil continues climbing, that is when rate cuts move further out. If rate cuts move further out, speculative assets face pressure. This is not about panic, this is about alignment. When risk assets and macro conditions align upward, you press harder. When they diverge, you tighten discipline. Right now, they are diverging. Crypto is optimistic. The real economy is constrained. That is liquidity versus illusion. Illusion is price alone. Liquidity is structure underneath the price. I operate based on structure. You should too. Do not let celebration override positioning. Do not let momentum override discipline. Markets reward patience more than emotion. And this is not the moment to be reckless. This is the moment to observe carefully and move deliberately. That is how you stay ahead of traps. That is how you stay protected when narratives shift. I'm Crypto Stock Markets, keeping you 2 steps ahead of the markets on Good Morning Black America.